Hello and welcome to this stock analysis blitz for IDOX plc. IDOX are a software company specializing in information management for government and industry. But in fact, if we have a look at their revenue by product breakdown, we see that the vast majority of their customers is public sector software. And given that 78% of their revenue is in the UK, really they're a bit of a one-trick pony. They only have one customer, which is the UK public sector. Now, over the COVID period, there was a lot of money being thrown at IT and software companies by the public sector because obviously the government went on a bit of a spending spree. This does worry me about this company because obviously we're now entering a bit of an era of austerity in the public sector, and so I think this could endanger their revenues moving forward. If we see how their share price lifted quite nicely over the last few years, and once I started looking at their numbers and looking through their annual reports, I see that they are actually a bit of a transformation story. We can see how they were actually quite loss making, almost 40 million a year back in 2018, and they're now making a small profit of a couple of million a year in terms of net income. As you can see, they've brought their costs down considerably and slightly raised their income. You can see that all of this revenue growth was in the public sector, and obviously that coincided with the COVID era. So looking into the numbers, and we see how although their income only has risen slightly, their expenditure has dropped significantly, and this was mainly due to their disposal of this loss-making digital business in 2018. And so here we see the transformation story where they've changed from being severely loss-making to making an okay profit. Now, at first they were looking really quite good in 2021 when we look at these numbers, but actually 4.3 million of this operating profit and net income that derives from a gain from disposal. So we see here the discontinued operations, and in the first half of 2021 they brought in 4.6 million by selling part of their Netherlands business. So actually, when you consider that, ever since this initial transformation of the business in 2019, their operating profit and net income has actually been fairly stable. It's interesting that actually from 2019 there wasn't a reaction to that complete change in workings, and so this here would have actually been a really good opportunity to buy. But it seems that they went up in value with all the other IT stocks during the COVID crisis. But the reality is actually that the share price did deserve to change based on how they transformed the business. But from 2019 onwards, actually, they've their sales have seemed to have been flatlined, or more importantly, actually the net income seems to have flatlined. So when I look at their assets, most of their assets are intangible assets. And when I dug into that, I'm guessing that this is where they've sold software to companies. They'll be on a multi-year license, and the local council have to pay them every year to renew the software licenses. I mean, I'm guessing that's what it is. All the same, their asset composition does seem to have a bit of a ethereal nature about it. Now, in terms of current assets, they are carrying 21 million of cash and 21 million of expected sales for software they've already sold. However, when we look at their liabilities, they do have 14 million of long-term loans, plus they continually issue around 10 million worth of bonds that they live off. So actually they're kind of net neutral, perhaps slightly negative, and so they're kind of okay, but certainly not as good as a lot of other software companies I've looked at, for like Softcat, for example. They also have this 30 million of other liabilities, which I couldn't find a breakdown of in their latest report. So, like I said, perhaps a slightly ethereal asset composition, and their market cap we see rose with the sector trend, and could be a little bit elevated here. Their price to book's 4 and their price to earnings is about 23. And so that places them about here. These other beigey dots here are other IT stocks. So they're kind of typically valued for these other IT stocks, particularly the retail ones. So this completes my look at IDOX. They're kind of a averagely performing company, I'd say. Having completed their transformation in 2018, they're still now really only a bit of a averagely performing company. They aren't particularly cheaply valued, and I'm not really very interested in them at all because their only customer is the UK public sector, and we've just entered a bit of an era of austerity in that department. So I haven't really got any interest in IDOX at all. They're a no-go for me. And I have to point out, if you wanted to invest in an IT stock, why would you invest in IDOX when you could buy some Softcat or Computer Center, a diverse customer base, and a robust earnings ramp-up history with no debt? Thanks a lot, Charlie, who was the subscriber who suggested IDOX. Please remember that I do these videos just for fun, and make sure you speak to a qualified financial advisor before making any investment decisions. I hope you've enjoyed the video, and please enjoy your day. Please read the disclaimer and remember that prices can go down as well as up.